everyone, it's Trout Lowen here with your Twin Cities real estate report for July 2023. I hope everybody had a fun, safe Independence Day weekend. So every month I like to talk through the previous month's housing market numbers to look at the trends and talk about how these trends impact home buyers and home sellers here in the Twin Cities metropolitan area. So before I dive into the numbers though, I like to note that the statistics that I'm presenting here are drawn from the Northstar Multiple Listing Service data for the 7-county metro area. That includes Hennepin, Ramsey, Dakota, Anoka, Washington, Scott, and Carver counties. I like to start with new listings. They are really the heart of the housing market. So in June, we had 5,417 new listings come to market in the 7-county metro. That's about 191 fewer listings than we saw in May. Now, that's not entirely unusual. May is often the strongest sales month of the year. The bigger news here is that the new listings continue to lag well behind last year and are significantly lower than pre-pandemic levels. New listings were down 18.7% compared to June 2022. And if you look back at the market before the pandemic, from 2015 to 2019, you can see that the drop is even greater. So looking at this slide data for 2016 and 2017, you can see we had actually more than 7,400 homes come on the market in June of those years. And those were actually still considered strong sellers markets. So the inventory shortage that we're experiencing is hitting hardest at the bottom price range of the market, homes priced below $300,000. In that price range, new home listings fell by 28.3% compared to June of last year. The only area we're seeing a little bit of growth in new home listings was again in the over $800,000 price range, although new listings there were up only by 1.2% year over year. So let's look at the total number of homes for sale. That number increased ever so slightly in June, but the number is still 17% below last year. That's an indication that buyer activity remains strong, despite some drop-off due to interest rates and some other factors. We are still in a tight seller's market. One measure of that is month supply. Month supply indicates how long the current inventory of homes would last given the current sales rate if no new houses were to come on the market. So month supply is creeping up as buyer activity slows down a little bit. The supply of homes edged up from 1.6 months in May to 1.8 months in June. That's for all home types. But if you take new construction homes out of the equation, the supply drops to just 1.4 months. So just as a reminder, in a market with a balanced number of buyers and sellers, we would have a 4 to 6 months supply. Median days on market is another measure of market activity. So the median number of days between the time a home is listed for sale and when it goes pending and is considered off the market dropped from 16 days in April to 12 days in May to 11 days in June. It's actually still a little bit higher than it was last June, but homes are selling at a brisk pace. So no surprise, home prices are rising again. Given the inventory shortage, that's not really a shocker. But after a couple of months of holding steady, the median sales price of a home in the 7-county metro rose to $387,000 in June. Now that's about $15,000 more than it was in May, and about 1.2% more than it was last year. Just a quick note here too, median versus average sale price. The median sale price means that half of the homes were above and half were below. The average sales price, well, is the average of if you added all the homes sold and then averaged the price. So the average sales price tends to be higher. The average sales price in the metro was $456,000 in June, and the difference between those two numbers may be an indicator of how low the supply is for homes below that median sale price, in that 300 and under range. In June, sellers are still getting about 100% of their original asking price, maybe a little bit more. So lastly, let's take a quick look at interest rates. Home mortgage interest rates today were at 7.2% for a 30-year fixed conventional mortgage and 6.65% for a 15-year fixed mortgage. So still trending on the high side. So what does all this mean for you? If you're considering buying a home this summer, you can expect strong buyer demand. But with low inventory of homes for sale, finding your next home could take some time. For those who can afford to do so, buying your next home before selling your current home is really going to make for a less stressful buying process. If you're thinking of buying a home this summer, you're really going to be up against that inventory shortage, and you can expect some competition in the marketplace. But just remember, every individual situation is different. If you want to know how these market trends affect your plans to buy or sell a home, call, text, or email me. I'm here to help. I hope this information is helpful to you. I'd love it if you'd give this video a like and hit that subscribe button if you want to see more of my videos on buying and selling residential real estate in the Twin Cities. Thank you so much for watching. I'll see you again in August.